Let's talk about long-term disability insurance. So you might be asking, do I need it? So answer these questions. Do you work? Have people relying on your income? Aren't financially able to go years or even just months without a paycheck? So here's some crazy statistics. So over 25% of American workers experience a long-term disability longer than 3 months at some point in their careers. 69% of workers have no long-term disability insurance coverage. 62% of all U.S. bankruptcies and more than 50% of all mortgage foreclosures stem from illness or injury-related medical issues. So if any of this applies to you, you need long-term disability insurance. A lot of us cannot go on for years without a paycheck. And, probably many of us also cannot go months without a paycheck. So long-term disability insurance could be a way to protect you in the future. So long-term disability insurance is an insurance policy that provides income replacement for workers if they become unable to work due to an illness or injury. So you pay premiums, which are usually 1 to 3% of your salary, in order to be covered in case you become disabled. You must meet your policy's definition of disabled to be eligible to receive benefits. So benefits are usually about 60% of your gross income, and you will receive benefits for 2 years up to retirement based on your benefit plan period of your policy. So, long-term disability insurance policies do not pay out benefits until after the elimination period, which can be from 30 days up to a year based on your policy. So, the longer the elimination period, the lower the premiums. So, this is something to consider when choosing a policy. So, benefits are distributed tax-free and can be used on anything. Your benefits will end when you return back to work. So the average disability lasts for around 3 years, and long-term insurance disability policies that last 5 years should be the minimum duration. But a policy that lasts until retirement provides the maximum protection and usually isn't much more expensive than a 5-year policy. So when determining how long benefits should last, which is your benefit plan period, you should also consider when they start, and that's the elimination period. So 90 days is typically the most cost-effective elimination period. So here are the types of long-term disability insurance plans. So one could be own occupation disability insurance. So it defines a disability as an inability to work at your regular occupation. And then any occupation disability insurance defines a disability as an inability to work at any occupation. So with an own occupation policy, you could get benefits if you can no longer work at your own operation. So say if you're a ballerina, even if you could work at another job. So these plans are harder to claim benefits from because you have to prove you cannot do any job at all, which is a hard sell, but can be cheaper. So that's the any occupation. Sorry, I didn't specify that. So any occupations are kind of harder because you're kind of saying, okay, like I can't work anywhere, which is harder to prove, but it could be cheaper. But typically, you're probably going to get an own occupation disability insurance plan. So, where can you get it? You can get it from either a private insurer or an employer might offer it. So, some employers do offer long term disability insurance, and if it's subsidized, it's worth looking into. But the benefit of the employer plan may not be high enough. So the definition of disability may be more strict than in an individual plan from a private insurer. The coverage amount through an employer plan can be limited. It's not portable, so if you leave your job, your insurance is gone too. And a private policy is portable and will follow you to any employer you're with. So I would suggest if your employer has like a very cheap long-term disability plan and it's subsidized, okay, you could maybe get it. But we definitely want to go with the private insurer because it's portable. It's going to follow us around whatever job we get, and we're going to be always be covered, and we're going to have the flexibility of picking what we want. So definitely you should prefer the private insurer.